Let's get ready and dive into this, shall we? All right. So yesterday, we ended off with that multi-time frame structural analysis, and I always love going through multi-time frame because being able to understand how to approach different trends and understand the fractality of the market is essential. We have to understand, there's never always going to be the same trend on every time frame. Think about gears, smaller gears trying to build a bigger gear that's working to build a bigger gear, and that's continuously moving nonstop. It's always doing the same thing over and over and over again. The only thing that's different is the time frame. So if we can imagine that the structure is fractal, right, with waves within waves within waves, that's probably going to tell us that everything else we're going to learn is fractal as well, meaning liquidity, meaning order blocks. Let's say we have an order block on a higher time frame that we're utilizing for an area to possibly, monitor, maybe to enter. Well, on a lower time frame, what do you guys think our entries are going to be? I mean, some of y'all already know, but those who may not know, what do you think smaller time frame entries are going to be based off of if higher time frames were using order blocks? If anyone can type in the chat, there's a fractality. The same things that we use on the higher time frames to view price, where ideally to monitor, possibly to get in, entries on lower time frames are also going to be order blocks, right? Everything in the market is fractal. And that's why whenever you hear traders say, oh, this is only applicable on one time frame, we'll use this on the 5-minute, it's garbage, it's rubbish. That's not true at all. The time frame you utilize a strategy on should be applicable on every single time frame. And there's still people joining. All right, we got 45 people, beautiful faces. All right, we have our admin watching everybody. So just a reminder from day one, please must keep your cameras on the entire time. Show your face. We are going to have breaks. We do have breaks scheduled today. We are going to be wrapping up day one. So we're not going to be going fast by any means, but definitely at a quicker pace to ensure your retention, some good overview, and then we're getting right into day two. But we're all ready. So yesterday we ended off with order blocks. We ended off with different order blocks, the types of examples. We know what they are. We only saw the basic anatomy or the definitions, right? So when we're looking at order blocks, I know this is going to be some review, but when we're looking at order blocks, we need to understand those core 4 features of an order block. And an order block must always have these 4 features. And if not, it is not an order block. And the reason why, some of you guys in the past might have thought of supplier demand where there's a lot of wicks, or maybe it's just one candle. That's only part of the criteria that's needed. But if it does not have an imbalance before, it is not an order block. And the reason why we need to have an imbalance, or remember gaps, right? We need to have gaps is because this is showing that there's inefficient price action. There's only one type of order coming through in the market. And in order for the markets to rebalance itself, it needs to come back and close these areas of inefficient pricing when there's only one type of order. So whenever you see an order block, you're always going to get some form of reaction, or you're always going to get some form of reaction. And this will always happen. So any move that happens anywhere, whether it be this, right? And anything happens anywhere, that is an order block being touched on one time frame, a smaller time frame. So we need to understand about order blocks 2 main things aside from those core 4 features that actually establish an order block. 1, in order for the market to move anywhere, 2 things need to happen. 2 things. 1, whenever the market, again, even when the market moves right here, it's reacting from some form of order block. Any move that happens anywhere, an order block is being mitigated. Nothing will ever just randomly happen or be randomly unsupported. It'll always touch an order block. So for that reason, there's always opportunity to enter any move in the market. The second thing is that there always needs to be liquidity collected prior to an order block being mitigated. And remember, when I say mitigated, that means when an order block is tested, when it's tapped, right? And when we talked about order blocks, we did, again, just a very brief intro yesterday. Order blocks are where institutions have previously gotten in the past, and they funded their own capital to stop out traders. So right here, think about it like this. We're going to have retail traders who are trying to sell right here. Well, where are their stop losses? Remember, they're going to be above here. Now, if you want to make it easier on yourself, just think about what breakout traders are doing, AKA they look to sell below lows and buy above highs. That's what essentially order blocks are doing. They're taking out these orders and then reversing price in the other direction. And what we have to think, and it might be a little confusing at first, is that this whole candle is funded by institutions. So therefore, it's called an institutionally funded candle. This is where the institutions are utilizing their own capital, their own liquidity to take out all the stop losses of these traders over here, right? They're collecting all their money. And then guess what? They're reversing price to go lower. But during this period of time, they're still in drawdown. They're still hundreds of millions, billions of dollars in drawdown. They can be in drawdown for days, weeks, months, years. There's no amount of time for how long an order block can remain unmitigated. With that being said, there's order blocks all over the place. Every order block will have a reaction, meaning it can just get tapped and then price can rapidly run away, or it can just have a small reaction and keep going through. But order blocks must be mitigated in order for the institutions to break even on their position. So the reason we identify order blocks is because that's essentially institutional intent showing us where the institutions need to return to break even on their position if they want to take price higher or just break even then go the other direction. So this was that basic introduction to order blocks that we discovered yesterday. And same thing over here, right? An order block, it always needs to take out some form of liquidity. Now, when we're talking about liquidity, it can just be the previous wick, or it can be a huge conglomerate of liquidity, right? So the order block, the color of the candle doesn't matter, but what needs to happen is we need to have that 1, 2, 3 formation. Now, when we hear about an engulfing candle for an order block, this is where a lot of people get confused. They think that an engulfing candle must look like this, and this is an order block, right? Because you'll have something that looks like this, this, right? And our order blocks typically candle 1, 2, and then we're going to have some form of candle over here, 3, and this is going to be leaving what? Our imbalance, right? We're going to have an imbalance left behind here. This shows us inefficient price action, and at some point in the future, prior to continuing lower, it needs to come back to here. Now, yesterday, I was trying to illustrate, well, we have an order block here, and also we have an order block here because there's imbalance before, right? However, what we know is that this order block here, for reasons that you guys will be learning, is that this is not a valid one. This is the true order block that will create the move. But what happens is this is still an area the institutions need to come back to break even on their position. So what we think will happen based off of our narrative is that price will probably break even, right? It'll mitigate this order block. And again, you guys will be learning about this today. As soon as the institutions break even on their positions, it doesn't have to go lower, right? There's only ever going to be one true order block that's going to cause the overall move. So what we can understand is that this will probably give a small reaction, then go to the real area and then go lower. So by understanding how to build your 2020 foresight vision, you're going to be doing that by learning how to first apply it in hindsight and then understand all the reasons and intentions, especially as we start diving into them today. So order blocks, they always must have these core four features, and all order blocks will give a reaction, but they're not always going to create the real move. So even here, right, we have some form of imbalance right here. There's an ever so slight imbalance. What happens? Price has to come back to the order block, right, in order to what? To go higher. Same thing over, even over here, we have a gap right here, correct? What needs to happen? The imbalance must be filled. And notice how it doesn't go lower from here. It's because this order block is not valid. It's at liquidity, but it will provide some form of pullback as you'll learn what SMC traps are today. So that was just a little review on some order blocks, but now let's look at some of the types. Now, we don't ever say, oh, this is a type 1, type 2, type 3 order block, but this is, a better idea for you to understand how to approach order blocks, because they're not always going to look the same, but they're always going to have the same criteria. That being, the first candle must be engulfed by the second candle. And for those who might not know what I mean by engulf, that second candle, right? If this is our order block right here, the second candle must open. It must open above the low in this first sell scenario. It must open above the low, the wick low of 1, aka our order block. It must open above, and then it also must close below, right? So this is the close. It needs to open above and close below. So this is for that. This is for any order block. It doesn't matter. And this is for the sells, right? Now, if we're looking at the buys, again, think about it. This is the open. It opens above and it closes below. And it's based off of candle anatomy that you guys should be familiar with, right? Because if this is a bearish candle, well, I know that this candle right here is really showing us this. It went up, it went down, and then it came back up. This is essentially what it's showing me. And if you don't know how to read the candlesticks and know what it's doing on lower time frames, that's stuff that we'll review in the community as well. But same thing here. Now, the opposite is going to be true. For a bullish scenario, what needs to happen? We need to open, right? We need to open below, right? Meaning we need to open below the wick high of the order block, and we need to be closing above, right? We need to close above for a buy scenario. And it's going to be the same thing here, right? We need to open below the wick, and then we need to be closing above the wick. So whether it looks like exactly how it looks here, or whether it looks maybe something like this, maybe this is the order block that we have, right? And maybe it looks something like this. My question to you guys is this an engulfing candle? Everyone type in the chat yes or no. Yes or no? So in this scenario, actually, it is an order block. This is where people get a little confused. Why? This is our order block, right? The wicks just throw you off. Where is the open? If it opens what? We open below. We open below the order block. Where's the close? We close above, right? We close above the wick. So this is an order block. It's just, this is where it gets a little confusing. A lot of people don't realize is, even though it may not make sense, it's still technically an engulfing candle. Now, when you think about engulfing, you typically think about a large body, blah, blah, blah. Sure. But by definition, this is still an engulfing candle. It still opens below and closes above. So that would be an order block in this case. Now, of course, this isn't going to be the refinement, but this is still a valid order block. And we'll dive today. We have a ton of examples to be going through, especially a lot of scenarios. You guys, it'll make a lot more sense. The last type of order block is this. So when we're looking at this order block, and again, don't worry about the types, the name is irrelevant, but the process is always going to be the same. Order block has to take out liquidity, which is great. So the actual whole order block here is from this, right? It's this low to this high. This is the whole order block. However, this comes to the next step of developing your intuition. We need to understand that it's all in the wicks. That's when we say, oh, do we look for a body close or a wick taking on another wick? Order blocks are literally in the wicks of price. If you see a wick, there is an order block inside of it. Therefore, if we see a wick take out structure, it's just another candle taking out another candle. So there are order blocks lying in there. So we can understand and utilize this to our advantage, and this becomes very intuitive. So I would highly advise you guys to write this down. This can be your overall order block. All price needs to do is tap this. That's all it needs to do. And let's imagine even this is a 4-hour order block. Well, what we know with fractality is that there are order blocks inside of order blocks, right? Just like there's structure inside of structure, order blocks inside of order blocks that we're going to be going over here in just a minute. But now what we need to understand is that if this is the higher time frame order block, there is going to be another order block in this wick. Now, especially when it comes to the mastermind protocols, let's say you have the 1 minute and this is on the 1 minute time frame, but you really want it to be precise for whatever reason. Using your intuition, and I do this a lot even with the live trading, I know there's oftentimes going to be an order block left in here. So even though this is where all price has to come, oftentimes I might just wait for price to come to the wick because I know there's a lower time frame order block, and then it will continue lower. Now notice it never ends up breaking this whole order block, but that's just a specific refinement method that you can utilize to even minimize your stop loss more. But as long as you keep in mind, it never has to touch this. It only needs to touch the higher time frame. And that's what that's what a lot of people don't tell you, is that when you're looking at order blocks, you will never, ever know what order block needs to be mitigated. The reason I say you don't know is because if we did know, we'd be billionaires, multi tens, hundreds of millions of dollars. We do not know. But even though we don't know, we can still have a very, very, very high degree of accuracy but understanding which is the most probable, because it all comes down to probabilities, especially go into the psychology section. Yes, all of us want to be perfect. All of us want to ping pong, but the first step in order to becoming not just profitable, but maybe even turning trading into a full-time profession or having it replace your your job or funding other expenses is you need to understand that the goal is not to be perfect, it's to make money. And this is where I was extensively talking with Tristan about this weekend and a couple others, is you can't just think about making $100,000 or $1 million. You have to be able to replace your income first, and you have to make plans and know when to get out, and don't worry about ping ponging the market every which direction. Perfection is never going to happen. I mean, it will never, ever happen. But you can be very close when you have a very high quality strategy and approach in order to get there. So with that being said, we're going to keep going on with order blocks, now getting into the locations of order blocks. So we reviewed this yesterday, understanding the different quote unquote types of order blocks and seeing how they're understand is price tapping the wick, consider closing the imbalance. Yes. You can put an entry there, but it doesn't have to tap. So like for instance, order block, we have an order block, we have a little imbalance right after. It takes out liquidity. So this is where price has to come. We reviewed yesterday. These are all equal highs. Price will do what? It'll take out buy side liquidity, AKA, equal highs where all buy orders are, and then do what? Take out sell side liquidity. Think about this is what we're getting into today. Liquidity, liquidity, liquidity. Structure becomes irrelevant once you understand where all the orders are lying and how to get there. So again, we have an order block here. And then of course, everything in here as well. Order block here would be that type 2 order block. Again, the type is irrelevant. What does it do? It does take out some form of structural or liquidity highs. We then see an aggressive move to the downside. We also see equal highs all within here. Price will then have to take out liquidity and then do what? Target new liquidity, right? Rinse and repeat. Now let's look over here, this order block over here, this type 3 order block per se. Now the actual order block itself is going to be right here. This is that whole order block. However, if you wanted to refine it and become, be very picky per se and have a very small stop loss, you can just refine it to the wick. You can absolutely do that, but I would not encourage you to do that only because the goal is to not have a 1 pip stop loss. The goal is to get in the trade. If you don't get in the trade and you want to be perfect, it doesn't matter. You're not going to be making money anyways. The first goal is to get in the trade. Once you're in the trade, then you can become a perfection queen, diva, whatever. Anything after, you can do as you choose. The goal is to make money. And I'm not going to tell you any differently. RR is great, but you need to understand that making money is the whole goal of this. And that's where we're going to be shifting your psychology in the next couple of weeks, especially when we have that first community call about psychology. So this is how we would be looking at just some basic examples of the order blocks. But let's keep going because we have a lot of other examples that are going to be helping you. So starting off today with brand new, we talked about mitigation yesterday, but we need to understand actually what mitigation is. So mitigation is the process of the institutions coming back to their order blocks and mitigating on their position to continue higher. So mitigation, what we remember from yesterday, is when we see an order block, it needs to do 4 things. It needs to take out some form of liquidity and needs to then be engulfed, right, by that second candle. This would be number 2. Number 3 is it needs to leave some form of imbalance right after, right? Even that is a little gap. And then 4, it needs to break structure, have some meaningful push. And then the last thing beforehand is we need to see some form of liquidity building, right? We need to see some form of liquidity building in the future before the order block gets tapped. And the reason we always need to identify liquidity before an order block is because that's going to ensure, absolutely ensure that we're going to be getting a sniper entry. Because when we talked about liquidity yesterday, liquidity needs to get taken and then price will reverse. Well, what's lying below the liquidity, that's going to stop and reverse price? Well, an order block. So the reason we identify liquidity sweeps is because that's telling us liquidity has been swept. This is where all form of retail stop losses were. The institutions funded with their own capital to take out all of these traders right here. They took out their capital, and it was a necessary evil per se to collect their money and reverse price. Now, in the future, what's happening is the institutions are still in drawdown at this point. So what happens is they need to come back to mitigate their position, and they're going to repeat this process. Before coming to mitigate this, what do? They'll build more liquidity before, and entice everyone to be taking buy positions based off support, whatever. And then what happens? They will be collecting, right? All the stop losses are here. They're going to be collecting their stop losses, retail stop losses, AKA profit for them. They're then going to be mitigating on their order block, right? They're going to be coming back to their entry, breaking even on their position, collecting the money from these stop losses, and then they're going to be continuing higher. And this is a never-ending process. And this is what we're going to be exploring today, which is called institutional order flow, AKA what will be forming trend lines. And this is why trend lines work up until a certain point, because us being smart traders, right, masterminds, we need to know what every purpose of a move is and what the future or what the move is going to be causing in the future. So when we see order flow, we automatically know that a trend line is going to be forming. So for instance, by the time dumb money or retail sees something they think is right, it's too late. So by the time we know it's going to be forming a trend line, we're entering based off of order flow. But then what are the dumb money traders doing? They don't know what the hell's going on. So they're like, oh, trend line, it's going to work. Wait, come down. And guess what? They get screwed. We're literally 10 steps ahead of every other type of trader because we know the intentions and purpose behind every move. So again, mitigation is just an order block that is tapped in order for us to go higher. Now, for some of you guys in the past, you might have said, oh, 50% mitigation is needed. All price needs to do is tap this right here. It does not need to go any deeper. Now, it can in some cases, and we have an approach we're going to be exploring today with that. But as long as you keep in mind that all price needs to do is tap that highest time frame order block, we're just going to be following intention thereafter. So if you guys need another minute to copy this down, I'll give it to you. Yeah, Kareem, I actually have that coming in the next slide, so I will. All right. All right, let's keep going. So this is an example of mitigation, especially let's kind of look at everything we've talked about so far. So starting from left, what do we see? Well, we can see there's clearly some form of liquidity being taken. We have some equal lows being collected. And then what does price do? Collects the lows and rapidly reverses. What does this tell us? Well, this is where the institutions have gotten into the market, funding and utilizing their own capital to take out all support traders, breakout traders. Remember how we talked about yesterday? Both of these traders are going to get stopped out. They collect both of their stop losses, AKA money in their pockets. And then this whole period of time, they're in drawdown. So in order for price to continue higher at any given point in time, it needs to come back to that true area. So the first thing we always do, right, is mark the structure per se. So maybe we have, a high, right, a low. Again, I'm not going to mark this. This doesn't make any sense, right? So I'd say high, low. We then have, right, becomes a new absolute high. After we identify structure, which is the first thing, the second thing we need to do is talk about trading range, premium, and discount. Trading range is clearly from this low to this high. Where is going to be our equilibrium? Well, it's going to be somewhere below there, right? After we understand that, the next thing we do is we now need to identify liquidity. Where are those equal lows, equal highs? Where is liquidity lying before our order block? If this is our order block, right, where's the liquidity lying within this range? You identify liquidity before the order block. So don't we see kind of some general pool of, 1, 2, 3, 4, 5? There's kind of a general pool of equal lows. So I can tell there's a lot of liquidity here. So what we know is going to happen is price is just going to be building liquidity here in order for us to do what? Come down to fill the imbalance completely and then collect these orders and then what? Run away. And then where's the new structure or even the new liquidity that price is going to be targeting? Well, right here, we have all relative equal highs because what do we know is some form of retail traders, support resistant traders are going to be selling over here. So what do we know? Well, they're going to get instantly stopped out, then price will come back into the range. And what does price come back to mitigate, right? An order block. But that is besides the point. And understanding this is how mitigation works. It's an order block that'll be mitigated, that is structurally supported, that'll cause price to go higher. Now, it's also important to note that if you're going to see order blocks all over the place, you absolutely will. They will give reactions. However, there's only ever going to be 2 order blocks you will ever identify. I mean, ideally, it'll come to the point where it's just 1, but 2 is the maximum that you should ever be identifying on a chart, because the only order blocks that we're going to be illustrating or marking out are the ones that are going to be creating new structure, right? So 2 order blocks that are structurally supported would be the only ones that we're going to be illustrating on the chart. So what are those types of order blocks? Let's go over this first. All right, so what I want you guys to do is I want you to mark out the structure that you see here. Remember how we talked about yesterday, we have reversal and continuation structure. So what I want you guys to do before, Jorge, you start marking, or anybody, before y'all start, I want to do this. Let me see here. Where is the, oh, here we go. All right, let's go right back to here. All right, so everyone go ahead and mark the structure. Remember, starting left to the right. You can't just pick a random point. Everything has to make sense. So go ahead and pick a point and everyone start. Don't follow the leader. Do it honest, be honest with yourself. Do what makes sense to you.
Battery.
All right. Well, let's see how y'all did. All right, let's see. Okay, so when we're looking at this, this is how we should be approaching it. We see some form of, high over here, see some form of low, some form of high, some form of low, right? Remember, we did have some form of pullback here. And, this was if you remember, I think the easiest way for me to tell you is squint your eyes. Don't go cross-eyed, but go kind of cross-eyed just a little bit and just see where the noticeable pullbacks are. And then that's all you really want to be focusing on. So we start up here, we go lower. We do have some form of pullback, right? Now, remember what we said about ranges, right? This is a range. And now 50% would ideally be around here. But what did we say yesterday? 40% is at the minimum what we should be expecting. Now, this ends up being a very valid setup, let alone for sells, which you guys will be learning about. But yeah, so I would consider this our structure. But then we have a low, we have a high. This becomes our breakup structure, right? It's the last lower high that's broken. So now what do we have? We have now, remember what we talked about yesterday? Lower high, lower low. Now we have a new high. So this now tells us structure is breaking. So how do we then identify where the next high or low is? Well, we have to drag all the way across. So in this example, the higher low is where's the lowest point? Here, here, or here. It's going to be here, right? Because this is the lowest point within that retracement. So where's going to be the new structure? Again, I'm not just going to do this, right? This doesn't make too much sense. What I'm just going to choose is this. This will just become that new overall high. So this is how I would be marking the appropriate structure for here. All right. So yeah, Picasso. All right. Now that's how I'd be looking at the structure. So now I want to ask you all is the next thing, which is premium discount. Where's premium and discount in the setup? Let's talk about over here that we're trying to figure out why this whole move happened. Great, right? We all know where discount is. We start with structure, always go to premium discount. Sweet. I'm going to go ahead and clear the chart so we can keep moving forward. You guys got it absolutely right. Now I want you guys to identify this. Why did this whole move happen here? I'm not asking us to anticipate in the future, but we want to understand why this happened. So based off of this, identify equal highs and equal lows in this scenario. All right, good stuff. All right, now the next thing after we identify those equal highs and equal lows, as you can imagine, right? We have equal lows, equal highs here. In order for us to go higher, we have to collect enough money to get there, right? So that next thing we want to ask is where's the valid order block then? We always identify liquidity before an order block. All right. So based off of this buy scenario, how do we know that this was the valid order block, right? Well, there was liquidity lying before it. That's what gave us insight that this is an order block. Now, if we had just been looking for buys, maybe some of you guys might have chosen this. Notice how the order block was still mitigated, but why didn't it work? Well, because there was no liquidity lying before it. This is where that liquidity was. So we need liquidity to be taken before price reverses. So absolutely, you guys have gotten that right. And what tells us that this is a valid order block, as Daniel has just illustrated, is what did it do? Where are the four things that it does? Well, one, it takes out some form of low, takes out some form of liquidity. Two, we have imbalance, right? We have some form of imbalance. The third thing is, don't we have a meaningful push? Now we have some internal structure breaking. We now have a new push to the upside. Four, we have liquidity building. Four, and then of course, five is the entry and the runaway. So good stuff, everybody. Should be some routine stuff. Now what we're going to be talking about is points of interest and structure. All right. Now we know what order blocks are, but now we need to go into the specific locations, because not all order blocks are valid. There's only ever going to be 2 order blocks maximum that have the chance of causing price to make a new range or new structure. Yes, that also counts for it. All right. So now, guys, some new notes going on here. All right. So when we're looking at this, we need to understand the first type of order block is always identify what price previously mitigated. If we ever have an order block, we need to see if it mitigated a previous order block. Go into that in a minute. But there's 2 types of order blocks, right? We have order blocks that are considered decisional and order blocks that are considered extreme. So for any given setup, as I mentioned, we're only going to have 2 order blocks that are going to be causing price to make higher highs or lower lows. So by understanding that liquidity was swept, that's telling us that it's going to be verifying that order block. Additionally, is that liquidity needs to be building before an order block. So the first type of order block is what we consider a decisional and then an extreme order block. All right. So I'm going to go ahead and type this on here with you. Point of interest for those who wants to know. Order blocks, POIs, supply demand, sponsored candles, anything, they're all the same terminology. And so commonly I'll say, supply demand, order blocks, IFCs, whatever. Now we're specifically talking about the locations of order blocks. So go ahead and draw these 2 examples exactly as I have them illustrated here. And this is what we're going to be calling our continuation point of interest. Point of interest is an order block that resides on a higher time frame that is a general area where we are going to be looking to buy or sell from. Now, this area could be, 15, 20, 30 pips. Mind you, we're not taking a position right off of the area. We need to have our confirmations for entry prior to getting in. But these order blocks that we're going to be illustrating are telling you guys where the most probable move is going to be happening. So from here, if we're looking at this buy scenario, this is a continuation pattern order block setup. If we have a low, a high, a higher low, a higher high, we know structurally that we are bullish. We know that we're going higher. Now, the 2 most common places for order blocks to reside are going to be in these 2 areas right here, and they always have to have relevance. If an order block is not lying in a relevant area, meaning if it's not lying in an area that created a very significant move or meaning, then it's not relevant, right? An order block has to create some form of movement, because that's essentially, again, remember, the institution's taking out some form of liquidity in order to reverse. And by identifying where this is happening, it's telling us where the institution's gotten in the past and where they need to break even on their position in the future. And we're utilizing that as our area for monitoring before taking any positions. So this first area right here is what we call our decisional order block. This is what we call our extreme order block. It's going to be our decisional. This is going to be our extreme. Give you guys just a second to write that down. All right, so now let's talk about this a little more. These get their names for 2 reasons. The decisional, we need to almost ask ourselves, price was almost deciding if it was going to go higher or go lower at this point. For instance, we could have some form of supply over here. Now this is, you don't need to draw this, but this was that kind of that last major push that caused the continuation to happen. So the decisional area is that kind of that last rebound before price really broke structure. Now, it won't always look like this. This decisional could be above structure. There are some different ways to look at it, but for time being, we're only going to be focusing on this example right now because it becomes very situational, but the setup is going to remain the same. The decisional order block is the order block that caused that last kind of retracement or pullback before exploding and causing this break of structure or continuation to happen. So this is what we refer to as our decisional because it was that last impulse before price went higher. And mind you, we are going to be having an imbalance just above. So if you want to be maybe labeling it as second IMB, second imbalance, you can do that as well. Now, as far as the extreme, right? We call this the extreme because it's the order block that is lying at the extreme levels of price, of the extreme levels of the retracement. Because when we're talking about structure, we have our low, right? Our higher low, and we have our higher high. Based off of this, price can come all the way down here. And as long as this low does not break, we are looking to buy. Extreme order blocks, as you guys will start to learn, they're the highest probability order blocks. Write that down. They're the highest probability order blocks. Now, that doesn't mean price is always going to come to them. If you want an exceptionally high win rate, only take extreme order blocks. And the reason is because at extreme order blocks, this is ideally where institutions are stacking order flow. Extreme is AKA OF. OF is order flow. So extreme order blocks are always going to be the highest probability. And the reason is, again, another reason is because let's say price has a reaction and goes lower. Well, doesn't this kind of end up being a break of structure? That tells us we're not looking for buys anymore. We're going to be looking for sells. Extremes order blocks are the order blocks that lie at the absolute lows of structure. And if we would talk about maybe ranges, thinking about fibs, these are going to be typically lying between the, I would say, 75 to 99.9% retracement of your overall range of here. So this is where that order block is going to be typically lying. And for your extreme order block, you must ensure your order block is the actual last candle that took out the liquidity. Now, for instance, let's say you had the only unmitigated or the only imbalance was maybe right here. Do not mark this as your extreme. I promise you. Why? Because this is where the extreme is going to be. And we have examples. Make sure that your extreme or any of your order blocks for that matter include the absolute low of price. You need to make sure it absolutely includes it. So for instance, if I had to go back and illustrate that again, the extreme right here, what this order block will look like over here, it'll look something like this. Right? If your order block will look like this, takes out liquidity and does this, this is your whole order block. You want to make sure your order block looks like this. It's the whole candle that lies in that zone. This is what you want it to look like. What you don't want it to look like is like this. Let's say you have, maybe this. Let me change this tool for a minute. Let's say we have this, we have maybe this, and then maybe we have this, and let's say that the only imbalance that we have is, right? Let's say the only imbalance we have is right here. You're like, oh, well, where's my order block? Maybe where's the imbalance? Where's the engulf? Maybe this is the order block. This is what I want to buy. Do not do that. Always find the candle that covers the whole zone. And that oftentimes will be on a higher time frame. That doesn't mean you're going to have a 40 pip stop loss, but by ensuring that you're getting the highest time frame order block possible, you're going to be ensuring that you know where the reaction is going to happen rather than just over refining. Because I guarantee you, if you only choose a 5-minute order block down here or 1 minute, you're going to miss out on so many trades because it never, ever, ever has to come to that 1 minute or 5 minute order block, because there always will be one lying at that level. This becomes an extreme refinement, which we'll be talking about shortly. But additionally, everyone is talking about these order blocks. We have our decisional, we have our extreme. We need to understand that both are probable in this scenario. But the question becomes, well, shoot, how do I know which one to take? Going into today's lesson, it's all about liquidity. So if I had to ask you guys this right here, based off of this, what we're looking at right here, at this moment in time, what do you think would be the best order block to take, the decisional or the extreme, based off of liquidity? Well, based off of liquidity, remember, we need to see liquidity being taken out into the order block, meaning we need to see some liquidity before the order block. Is there any liquidity over here? No, right? So at this moment in time, we have to imagine that this is some form of low that is going to be utilized as, remember, there's orders below here, right? This is going to be utilized as some form of low that needs to get collected into the order block. So what would happen is this extreme would actually become the most probable. Now, let's say we had something that looks like this. Now, what do you think, which order block becomes more valid, the most valid one at this point in time? This one, right? It's all based on liquidity. So if you have liquidity lying before an order block, remember, there's orders lying below here. What do the institutions have to do? They will take out the liquidity. And by identifying an order block that requires liquidity to be taken out into it, this is what's going to cause price to then continue higher. So in this example, the decisional becomes more probable. And this is why we will always be having sniper entries, because two things are happening. Enough liquidity is getting taken, and the order block is actually what's going to be reversing price. So this example becomes the most probable in this scenario. Now, again, let's say we have something that looks like this. Based off of what we can think about, there's no liquidity here. What do we think from this moment in time? Because remember, there is going to be an order block. Let's say price is in this order block, right? Let's say price is in this order block here. Right? And let's say that it's in the order block, but let's say there's really no liquidity beforehand, right? Maybe let's say there's no liquidity. If we know that this order block isn't going to create new structure and it needs to go down here, well, we can possibly assume that the reaction will do one of two things. It'll either come all the way down here, then go higher, or it'll just have a small reaction to do what? Collect enough money to then do what? Collect some equal lows, right? So then this could happen. And do you guys see now, hopefully you guys can see that both of these scenarios make sense? By understanding what makes the most sense and how to approach structure and liquidity, you always need to be thinking in your mind, any move that happens in any market, you need enough money to get there. That's what we're talking about today. Any of these are probable, but how do you know which order block is the most valid one? Well, depending on the liquidity that's lying before it is how you're going to figure it out. So let's look now at our sell scenarios. Let's say we had something that looks like this. What do you think becomes the most probable? This one, right? Why? Liquidity taking to drop. And you guys can see that will make sense too, which is great. Now, let's say we flip the script a little bit. Let's say we had this. Based off of this scenario, we need to understand that, let's say that this is already mitigated, right? This order block was already mitigated. Now what happens? Right? So we need to think about the decisional. The decisional actually acts as a form of liquidity. When the decisional is mitigated, don't we see how these actually form equal highs right here? So this tells us that we need to take out the equal highs in order to go lower. So you'll be able to take decisionals, but you need to understand that they could provide a little move or they could provide the real move. And based on the scenario and those external factors that you'll be learning about, you'll know which one is the most probable to happen. So even here, again, thinking about it, yes, we took out some form of high and then we had some form of reaction. Well, you're going to be breaking even regardless once you understand the protocols. Additionally, what happens? Well, we can actually just Go higher, utilize this as some form of liquidity, and then go lower. So both are probable, but again, decisionals, extremes, make sure that you have both of these scenarios marked out as those are the only two types of order blocks. If you don't see an order block that has relevance, do not take it. Do not take it. It'll either fail completely or have a small reaction. All right, so these are the continuation points of interest. All right, so now let's look at it. Now let's look at an example, okay? We're looking at this example here. Remember, we always do those things, and we have a setup, we have a checklist that we're going to be providing you guys after the boot camp, especially when we start day 2. So looking at our checklist here, or not the checklist, but what we know, the first thing we always need to identify is structure. So we're going to be having, of course, some low. We're going to have some form of low over here. And now let's just say for this example, because I know y'all can't see it, structure in this example looked like this. This is what it looked like, okay? So we know structurally we're looking to buy. Based off of our trading range, we have a low, right? A higher low, we have a higher high. What are we looking to do? We're looking to buy. Now, I'm not referencing this example. This was a lower time frame order block, but how could we know that this would be the right order block? I know, again, guys, this was on a lower time frame. Don't worry about, oh, why do you choose this and not this? Don't worry about it. But for right now, what told us that this was the right order block?
Built up liquidity.
Yeah, right. Built up liquidity. Why? Because we had all of these equal lows right here. That tells us this is the right order block. So thinking 2 steps ahead, right? We want to not just wait for the right move, but we want to really make our money count. We want to understand what's going to happen where. How can we actually understand that this is going to be the right area? Well, again, liquidity. So when we understand how liquidity works, don't you think there's going to be some other opportunities maybe on a lower time frame in here to then possibly sell down to here? When you understand this, you can start trading the market in both ways. So this is how we need to approach it. This becomes an order block. Now let's talk about this. The range, great. This order block was successfully mitigated. It made a new high. Now we have a new structural range, right? We now have a new low. We have a new high. Order blocks, where's our extreme? Where's our decisional? Extreme is always at the lower levels of price. Where's the only imbalance? Well, this is the first imbalance. So this is our extreme order block, right? Because we have imbalance from here. There's a huge gap, but again, this is really where the whole gap exists right here. So we have a huge gap here. This is a very probable order block. However, we always have 2, a decisional and an extreme. So in this example, the extreme would be where? Well, right here. Why? It takes out some form of low. Institutions take out liquidity and go higher. And where's the imbalance? Well, it's left right here. Additionally, what gives us confirmation that this is going to be the right order block? Right? We have liquidity beforehand, and it takes out this liquidity and then, of course, makes new structure. So based off of this, if I were to ask all of you guys, based off of this scenario, where do you think the next possible order block would be in the future? All right, well, that is definitely true. So we got some people saying this area. Yeah, this could happen, but why do we think this probably won't happen? Why don't we think this will happen? Aha, do you guys see? Remember what we talked about? The decisional can create liquidity for the extreme. So this will be a great move, but guess what? What do? We took out some structure, right? So what do we think can happen now? Price can take out equal lows and then do what? Then go higher. This will also be another type of liquidity you guys will be talking about today is trend lines. Why trend lines fail? So this is how just some confluences you can understand which is going to be the real move. But you're always going to have 2 order blocks. And then guess what? Same thing on lower time frames, right? So that's just a first preliminary example of how to approach it. Always being aware of liquidity, put liquidity first, always. You know, structure, sure, it's important, but today liquidity is going to be everything. If you do not see liquidity, you are the liquidity. Liquidity is necessary. That's why I was saying in this example right here, where's the liquidity for this order block? There is none right now, right? So we need to be looking where the liquidity is, which is right here. Now, let's say in the future, maybe price was doing this, right? Sure, right? We could possibly get some form of reaction, but what I think would be most likely is probably just a small reaction to go lower, right? Equal highs, go down, and go higher. You'll be able to have this once we keep practicing. This is one example. Let's go over the next. This is an example where the decisional is working out. Let's talk about an example where an extreme works out. So in this scenario, we are looking right here. We structurally always start with structure. We have a high, we have a low. We now price broke structure. Again, I'm not illustrating this. This is, if you squint your eyes, this is nothing. This doesn't mean anything. It's not relevant. So where's the structural high? It's right here. Now let's think about extreme and decisionals. Well, where's the extreme? Do we have any imbalance? No gaps, no gaps. Oh yes, there was a gap here, but it was already filled. So this is telling us that what? We had an order block here, but guess what? It was mitigated, right? So now the new order block becomes right here. Think about the extremes, the extreme of price. Now let's think about our decisional. Where is our decisional going to be? So in conditions like this, some people might say, oh, well, the decisional, it's the last candle that caused price to go higher, blah, blah, blah. Some people might see the decisionals here. Some people might say the decisionals here. Some people might say the decisionals here. But my question for you guys is being real with yourselves. Which one besides one? Yeah, mute yourself, B. But yeah, based off of this, which one would you guys honestly choose as the decisional in this? And be honest with yourselves. 1, 2, or 3. Type in the chat. All right. So yeah, there's definitely some. Yeah. So let's think about this. First of all, why is 3 not right? Well, 3 is, yes, there is an order block here, but notice what happens. It does get mitigated, right? And we do have a reaction. And notice any move that happens anywhere, an order block is going to be mitigated. So you would get a reaction. And yes, there is some form of liquidity lying above it. But what's most important to understand is there's still what? There's still liquidity lying below. So ideally, it needs to come to here. Why 2 isn't valid is, well, isn't this just equal lows right here? 2 is lying at liquidity, right? So we know that 2 right out of the bat is not valid because there's liquidity lying before it, because it's lying equal lows. That does not take out any form of liquidity. Additionally, is if we're looking at this, does 2 doesn't really take out any form of liquidity either. The reason I would choose 1, what's the main reason I would look at 1? Right? We have liquidity that must get taken. Liquidity must be taken. Price missed the order block, came higher. We have liquidity at lows before. So this gives me confidence that we can be looking at this order block for us to then do what? Go higher and take out some more liquidity before going lower. And this is oftentimes what we're going to be calling an SMC trap when it's the wrong order block. That's today. So now let's even think about this a little more, right? Where's all the liquidity within this range? Yes, we have an extreme, but where do we know price is going to come after it comes to the order block? Well, new liquidity, right? New structure. Sure, we know price has to come here, but where is the first area, probably with confidence based off of liquidity, that we know price should come to after we get in here? Where do we think is going to be that first area? Let's see. Let's get everyone going. Remember, think about structure. If it's not structure, then what tells us everything?
Can you repeat the question, please?
Yes. If this is where we enter right here, and we know that we want to make new highs, besides structure, when we're thinking about liquidity, where do we know the first area price should go before reaching here? Right? We know that price should be going over here. We know that this needs to happen, right? And I make it very situational because we don't want to say, oh, that's easy. I could have done this. That's the wrong way to backtest. That's the wrong way to approach. You need to be honest with yourself. Exploit your weaknesses. You need to be, hey, would I actually do this? Be okay with losing. So in this example, We have taken out liquidity. So what do? Where's equal highs? Well, we have equal highs here. But additionally, remember what we said, right? Yes, this is an order block because remember we have imbalance, but what's this order block lying at? Liquidity, right? So notice it will get a reaction. The order block itself will have a pullback, but because there's liquidity lying here, what do we think is going to happen rather? It'll just have a small pullback for us to then do what? Take out the liquidity. And then after it takes out the liquidity, what do we have to do? Take out more liquidity. And you'll be understanding how exactly to know this will come here as well. And then guess what? After we take out liquidity, what do we need to do? Take out more liquidity. Now we have a whole pool, right? So then what happens is, let's say now this is where we are in this scenario. And I'm spending a little time on this and we're going to pick up. Let's say this order block was mitigated. All right. And I want to ask you all this. Let's say this is where we are. Where's our next decisional and where's our next extreme? How do we know which one is going to have more relevance at this point in time without even knowing what's going to be happening next? How do we know which one and which one do you, well, you guys already saw it at this point. Which one do you guys think is going to be the right one or two?
It's two. Honest. It's two because you don't have any move, no retracement at the top.
Mm-hmm. So we have one and we have two. Well, that is partially true. However, and yes, it is valid, but what we need to understand is where's the liquidity lying before each order block? Identify it right now if you guys can. We have this decisional is acting as liquidity for the extreme. However, what do we also see here? Don't we see what are these right here? We see some form of equal lows. Remember, retail right now. This is retail, nothing regarding anything we're doing today. Don't we see something here? Equal lows, right? So what does this tell us? That this one is actually going to have the most precedence right here. Because what can happen is we can just come up, come down, and then maybe if this were to fail, right? It could also do something like this, right? Because guess what? Now we have some equal lows here, and then price can go higher. And hopefully you guys see why this also makes sense. So we'll never know exactly, but we always need to be 10 steps ahead. Even if we're wrong, we need to know how to be right. Let's say this ends up being wrong. This is what would be needed for this to be right. Why? Well, we have liquidity before, but at this moment in time, this is where the liquidity is. So what do? Look right below it, look right below. And that's what's going to give us the reaction. So as exactly happened, what do we see? Equal lows. Okay. Liquidity being taken. And then what happens? After we take out liquidity, where we need target, we know for sure we can be targeting above here. And what's left above this liquidity? An order block, right? So by identifying liquidity before order blocks, that's going to guarantee a reaction. And guess what? After we take out liquidity into an order block, now we need to ask ourselves, where's the next imbalance? Yes, there's imbalance here, but this won't work. Why? There's no liquidity before. Where's the next imbalance? Imbalance. Well, there's no imbalance anywhere in here. So the only thing that we can assume is what? Price needs that there's going to be a lower time frame order block within here. So if there's no imbalance, guess what? You look below all of it. Guess we take out this liquidity, and where's the liquidity? Well, it's right here, a new low. This is what you guys will be learning about today when it comes to the world of inducements, right? Inducing you to see the wrong structure at the wrong time. Wrong place, using your money and your emotions against you. But this is just a little bit more in depth of an example and showing you that these moves happen every single day. Now, if I were to ask you based off of this, right? Based off of this point in time, if we want to buy in the future, where do you think a buy would occur? Based off of liquidity. All right. So you guys are absolutely right. Remember, don't worry about order blocks. Liquidity is king first. So let's see. Where's the liquidity? Well, we have an order block. There's no liquidity. So guess what? We look to buy below this low, right? Where's the next level of liquidity? Oh, we have equal lows. Is there an order block? Yes, right here. So this could work out, right? This could work out right here. Oh, where's another equal lows? Oh, yes, here we go. Is this an order block? No, the order block is already mitigated. So guess what? These are equal lows. Where's the next level of imbalance? Right here. So there's only a couple options, right? Price can take this out, come here, go higher. First option. Second option is we will have a reaction. Guess what? We can go down to here and then go higher, which this, of course, this would be the first preferred option, right? Because we have equal lows before to go higher. And what's that next and third option? Well, we can do this. Have retracement, come here, more reaction. We can then come to this order block, and we know we'll get some form of reaction, but guess what? It can just take out liquidity, come down here, and then go higher. I know this is pretty advanced right now, but just getting it in your mind that liquidity is everywhere. We have, in order to go anywhere, you have to collect enough liquidity to get there. And that's all that this is about. But let's continue. I know that today.
I have a question for you, Griffin.
Yeah, one question, then we got to wrap it up, brother.
Yeah, so why this is getting mitigated twice?
Because there's a lower
Yes,
time
sir.
frame order block lying within here. Remember how I said there's order blocks within order blocks? There's going to be a lower time frame order block within here. If we're looking here, is there any imbalance anywhere? No.
No, exactly. But okay, so that means this one here. Yeah,
Yes.
you're saying that there might be an order block here.
Yes, no, there is. There is.
Yeah.
This was on AUD JPY. This was a 2-hour order block. So there's always order blocks within order blocks, and that's what we finished off day one with, is all the refinements. So I completely understand where you're going with it, but when we're talking about liquidity and order blocks, the only liquidity in here is below a low, right? Where are breakout traders having their positions? Above highs, below lows.
Yeah, right here.
Right?
Right here.
Exactly. And guess what? You already know what's going to happen before it does. So that's a little insight of what we're going to be learning about today. But don't worry, bro. That was great. That was a good question. There was an order block on the lower time frame, though.
I've definitely seen that happen on GU. That's all. It's like it definitely happens.
Mm-hmm. All right, guys. So now let's talk about more continuation patterns, right? Because remember, it's decisional and extremes. When we're looking at this, we see that we have a high, a low, a high, and then what do we have? We have some form of structural break, right? So after the structural break, we need to ask ourselves, where is the next decisional? Where's the extreme? Well, based off of this scenario, right, we have what? Liquidity is taken, so this becomes an extreme, correct? Or correct, right? This becomes an extreme. Now, where's the decisional? Do we see any other order block inside of here? No. So the decisional, and if you guys look at the drawings you have, remember in the drawings, it looked something like this. That's what we had. Well, the location changed a little bit, but this is the only decisional we have. Remember, it's an order block. The candle right after, it takes out liquidity. Even the wick taking out another wick, that's still liquidity being swept. That's fractal liquidity. Liquidity is swept. It's engulfed. We have imbalance, a bunch of imbalance to say the least, right? So after liquidity is swept, order block drops lower. We're now structurally bearish, right? We now have a high. We now have a new low. Now let's think about this. Where is the liquidity that tells us this is the correct order block? All right, we have a decent bit of liquidity, right? We have all of these equal highs here for sure. Now this would be that kind of that last line of defense that tells us this is the correct order block, but also of course we have this. Now this is still pretty far away from this order block, but what we know is that it'll probably take it out and then go lower. So we just have more liquidity building. Then makes that mitigation. Then of course, what do we expect combining structure, liquidity, everything else? Well, we know that it's going to make new structural lows. So in order for it to get there though, notice what are we always going to have? We're going to have counter trend order blocks, right? So if we're thinking about liquidity, after we take out equal high liquidity, we now need to take out sell side liquidity, which is where? Well, we have lows here, and then of course, guess what? No imbalances here. So make a new low. And notice after every time liquidity is taken, you're going to have some form of rebound. That's what, after more liquidity is taken, some form of rebound to keep going lower, so on and so forth. So again, we now have a new high and a new low. So let's talk about ranges. We now have a high and we have a new low. We always gonna have an extreme and a decisional, right? Where's our extreme? Well, we had a previous decisional that was mitigated. So now this becomes our new extreme. Why? It takes out liquidity. We have imbalance after and huge sell-off. Now we want to ask ourselves is where is the decisional? And again, I want you guys to be honest with me, with yourself. It doesn't, transparency, it doesn't matter if you're wrong. Be honest with yourself. If you can do that, you're great. Where would you say the honest decisional is? 1 or 2? All right. Well, now for those who are saying this, let's assess and let's be honest and let's see how we could actually have known that this is the right one. How could have we known that this is the right one? What's our entry trigger? What tells us that this is the right order block? Remember, awesome. So when I said this is the right order block, 2 things. It needs to take out some form of liquidity, and also it needs to have liquidity before it. Now, if I were to say that right now, if I were to say right now, which order block is most valid, right? Or even right here, right? If I were to say what order block is most valid, this is where you always need to adapt the price, right? Well, at this moment, of course, we're not going to be marking this because there's no liquidity before it, right? What would we mark? We would be marking this. And hopefully you guys can see that because we always need liquidity taken at this moment in time, the right order block, this would make the most sense, correct? But now how it's going to change, remember how I first introduced it, is whenever we see liquidity building before an order block, that's telling us that that's the right order block that's going to happen. Remember, because we're building up liquidity, orders will be collected, and then price will be moving. That is the first thing that can happen. Once it starts to build liquidity, you need to adapt the price to say, all right, that's the right order block. This is what's going to happen. So liquidity verifies your order blocks in the most basic sense. Now, again, notice what happens. Price takes out liquidity, and then, what does it do? It then comes and it breaks structure ever so slightly. So this is a winning trade, right? You come back to your decisional and you break new structure. Now, what we need to understand, just like the last example, I think when Vincent, we were just talking about it, this order block is still valid, but yes, it was mitigated, but what we need to know, and I know Taslim, if you're in here, you had a question about GU, I think it was last month or something, yes, this order block was mitigated, but we need to understand after this liquidity has been swept, now we need to sweep this high. However, this order block has not been invalidated yet, if you've noticed. Price can come back up into it one more time and then drop, but that's telling us there's going to be another small order block inside of here. Just like we talked about the last example, we can revisit the order block, but there's going to be an order block inside that's left unmitigated. So now let's say price is going lower. Let's say this is where price is now. Where do you think the next best area that we're going to be selling from is going to be? If we were to sell in the future, remember, liquidity validates everything. And I want everyone to participate, please. Where do we think the next order block is going to be? All right, well, let's take a look. Let's take a look at this, right? The next order block that I think is going to be possible is what? And I'm going to clear this, guy, so we can keep going forward. What do we see here? All equal highs, right? So yes, of course, you guys, oh, well, there's liquidity here. Maybe there's an order block here. Yeah, that'll give a reaction, but where's all the money? We need to think about it. In order for us to go anywhere, we have to collect the money to get there. In order for us to go lower, where's going to be the money that's going to cause us to get there? Well, it's going to be above these highs. So with that being said, there are only 2 areas where we have our extreme up here. And also we can get a small reaction from here. So what do we think is going to happen? Possibly something like this. Take out this liquidity, come to our order block here, right? And then it can go down, which would be awesome. That's the first example. If that doesn't happen, what can happen is we will get a reaction from here for sure because there's liquidity. But in order for us to break this high, we're going to have to take out some form of liquidity to do so and then go lower. And then this is establishing what we call order flow, consecutive mitigations of extremes. And this is what we are also going to be talking about today. So I know this is advanced. We have a lot of practice that we're going to be doing, especially getting into today's topics. But don't worry, guys, we're here for you. It's not going to be like this is the first time you're ever going to learn it. All right. So mark down questions that you have. We'll visit them. If we end up going over today, I'm dedicated to you guys. I'm here for you guys. If you guys want to stay longer, I'm here to help you. Yes, I'm on a time limit trying to finish this as fast as I can and most efficient for you all. But let's say you guys have some questions. I'm more than happy to stick around for a little while after. All right. So now we understand this. Let's go to the next example. Let's view this. Remember, because every scenario is different, but we're always going to be utilizing the same logic. Every move has to have logic. And if it's not logical, then you can't make sense of it. So let's look at this example here. All right. So what are we looking at? Well, it's always starting from the left to the right. We see structure. So we see high, low, and a new high. Based off of this, we would imagine that we are going to be looking for some form of buy, right? However, this is where we remember how we were talking about the whole market fractality yesterday, and we were talking about multi-time frame analysis. Before I get into this example, I'm just going to do a quick 1 minute overlay. When we were talking yesterday about structure within structure within structure, right? On the 4 hour, what's happening here is we are bearish. Okay. So what we have here is we have a bearish order block in this example that we're about to go through that price is coming up into. But remember how we have structure inside of structure inside of structure? Well, within our 4 hour structure, this structure, right, is going to look something like this. We're going to have price rolling over, aligning. So then we're left in a scenario like this. This break of structure, everyone, indicates what on the 4 hour? Everyone unmute their mics, talk.
Pull back.
Reversal.
Pullback, reversal, right? So we know that because we had the low time frame break, that's a pullback on the higher time frame. So it'll do something like this, do something like this, do something like this. Great. Now we're in our order block, right? So ideally what we want to see is we want to see what? Once a break of structure happens, that's pretty much going to be the sign for us to do what? Align with the higher time frame and us to continue lower. That's, traditionally what we're going to be looking for. However, another way to approach this when we go over the mastermind protocols is by the time typically you wait for a break of structure, the move has already happened. So what we need to understand with this 2020 vision is that, yes, this low needs to be broken, but with the fractality, we know that there's structure inside of structure, the Russian dolls. So we know within this structure, what do we have? We're going to have more structure. So how can we utilize this and get it maybe a sooner entry? Well, we wait for a break of structure, right? And then we look to just sell here and then maybe have confidence and then target lower, right? Because by the time a BOS happens, it could just sell all the way off. And I guarantee you that's happened to you at some point. If you wait for a break of structure, it's too late to get in the trade. Mastermind protocols, oftentimes we don't wait for a break of structure. We have the mastery and understanding what the intentions are behind price. So this is actually what we're going to be looking at in this scenario. So I'm going to clear the drawings and let's look at this. Remember, we have a higher time frame supply zone over here, higher time frame supply zone right here. What are we doing on the lower time frames? We're having some form of complex pullback, right? We have some form of complex pullback that we're looking at. So if this is that structure, and we know this is our 1 hour structure, this is ideally where we want to be looking to go higher. However, what we know is based off of our own analysis, sentiment, whatnot, is that we're going to have structure inside of structure, correct? So what happens here is after price mitigated our supply zone, we took out liquidity, swept it, and then price dropped all the way off. How do we know that this is the correct order block? What is telling us that that's the right order block? Liquidity, imbalance, liquidity. So what do we utilize? Rather than thinking, oh, structure. Oh, shoot, this is breaking structure, looking for buys. Oh, shit. Oh, damn, we're selling again. Blah. Don't do that. Don't do that. Focus liquidity. Where's the liquidity? Above these highs. We have an order block that's following order flow, which we're going to be learning about. And then price will then mitigate this order block. And then what happens? This is our entry. Price sweeps liquidity into the order block. Becomes our entry. And then what happens? High, low, higher low, higher high. We have a break of structure. Where becomes the new trading range? From this high to now this low. This is internal structure that I'm identifying within our main structure. So now what do we look for? Well, we're going to have another extreme over here. And now you guys can't see this. This is a lower time frame order block. Remember how I said it's all in the wicks? There's an order block on a lower time frame. So now what's giving us confidence that this is the right order block here? I know you guys can't see it, but what's giving us confidence, right? Always think about it. What tells us it's right? Boom, equal highs. Boom, more liquidity. More importantly, what else do we have? Boom, boom, right? So all this liquidity is telling us we need to be going down. Trend line traders, oh my God, yes, billionaire. No, not happening. So this is how we should always be approaching it. And then what you'll be learning is how you can enter here, enter here, enter here, enter here, enter here. Now, and this becomes a more sophisticated example where we talk about decisionals and extremes. Let's say right here, we had some form of low broken. Let's say here we have, right, where's our decisional and our extreme? Both, all of you guys go ahead and mark it out, decisional and extreme. Right, so this is our decisional or our extreme. Now, a lot of times at first, when you're first getting utilized or familiar with the strategy, maybe this is unmitigated. Be like, oh yes, this is an extreme. Oh, this is decisional. No, don't think about it like that. You need to go to a lower time frame and see where there's some form of pullback, because what's this showing us on a lower time frame? Well, it's showing us this price is coming down. It has now come up to then go back down. So we know that we're going to have some form of decisional in this area. This becomes very intuitive. I would definitely draw an example of this. This is also, for those who know what a hidden base is, this is also a hidden base. I do not utilize hidden bases at all, but in specific scenarios, we'll know when they're correct and when they're not going to work out. So this becomes a decisional. In the future, right, this will become an extreme. But again, why don't we think this one will work? And how do we know that this one's going to be more probable?
Because they haven't shown any trace of liquidity or pullback, retracement, I mean.
Yes, sir. And additionally is, how else do we know that this area is wrong? What's above it?
Equal. Oh, okay.
Equal highs, right? So if we know these are all equal highs, guess what? This is not right. Always put liquidity first before order blocks. If you can identify liquidity, that's going to tell you what your valid order block is, right? Remember how I said, oh, well, there's an order block here. Don't do this. Always focus on the extremes of price. There's going to be one down here, so focus on it. Always focus on that real move. Again, even there's an order block here, right? Great. Order block here. Perfect. Order block here. This will give a reaction, but guess what? What do we have? Equal lows, taking out liquidity to then take out more liquidity. It'll become more habitual and routine, but just getting familiarized with these. So now that we've gone through these continuations, now let's talk about reversals. Reversal POIs, reversal structure. There's always going to be logical areas that are going to make the most sense. So go ahead, everybody, and I want you to draw this same example. I'm going to give you guys about 30 seconds to do so. All right. So in this example, remember, we have those different phases of trending. We always start with the downtrend. We then phase 2 is that break of structure. And then we have phase 3. So remember, we always have our decisional and our extreme, and they have to come from meaningful areas. So this first example, this is what we call our decisional and our extreme, right? Typically, at what we'd expect here structurally is we would expect what? Price to come up to a lower high, which lower high, lower low. This is our trading range, correct? And we would expect price to continue lower. This is what we would expect. However, what did we have? Price had a reaction from our supply, from our order block, and it failed to make a new low. It failed to go lower. So in this scenario, we call this, if this is a supply, right? Supply, order block, all makes sense. I just call supply demand. If this is a failed supply, this becomes a new demand. So we call this an S2D decisional. Because what happens is supply failed. We failed to make a lower low. So this supply was effectively converted into demand. Supply was converted into demand. In this example, this is what we call supply to demand decisional. It must follow this structure. If it doesn't follow this, it's not valid. For instance, let's say we're in an uptrend, correct? Let's say we're in an uptrend, and maybe you have something that looks like this. Price has a little bit of a reaction, comes down, goes higher, right? Failed reaction. This is not a S2D because we were in a previous uptrend. It must have a prior downtrend because it's the true supply because we're selling. Supply demand, it has to be from a downtrend. So now the couple examples that we can view from here are there's always going to be two possibilities, right? At this moment in time, based off of liquidity purely, which one is going to become the most probable? Well, it's going to become the extreme. Why? Because the extreme is, or the decisional is acting as a form of liquidity, right? Acting as a form of low that we need to take out in order for us to go higher. Additionally, everybody, when you see this setup, you only look for this if we are at a higher time frame or a relevant order block mitigation. Meaning, let's say what we were structurally bullish in this example, right? Let's say that we are looking for buys. This is our last low, our last high, and maybe let's say that we're looking to buy, okay? Let's say pro trend, our pro trend scenario is buy. This is all going to be what? What did we call this yesterday?
The bearish pullback.
Yes, our bearish complex pullback.
Yeah.
All this is just going to be nonsense. That's just the whole purpose is to pull back to cause price to go higher. So this is typically what's going to happen. And definitely mark this out. If you do not have an order block that price is mitigating, it's not going to go higher. It's just going to continue to go lower. So we must have a higher time frame order block being mitigated, and that's when we look for price to start to reverse. So this is called our S2D decisional. Yes, we're almost done with day one, Jorge. Right, so S2D decisional. Now what we're looking at is price to do what? At this moment in time, the S2D, if we see an example like this, it becomes the most probable scenario. The S2D decisional does. S2D becomes the most probable when it comes to reversal patterns. However, if we don't have any liquidity before this, guess what? We're going to have the extreme workout because what can happen is, let's say there's no liquidity built. Well, what do we think is going to happen? This is where equal lows are, right? Possibly get some form of reaction. Price could come down to the extreme, and then we can go higher, right? Because where's the liquidity? It's right here. This is one example that can happen. Please draw this out. This is what it would look like if the extreme were to work out. And you can just do dotted lines, whatever. All right. The second thing that can work out is if we have this. Now, obviously, which becomes the most probable? This one. Yes, sir. Right? Because why? It requires liquidity to be taken. Institutions are going to fund this whole move with their capital to stop out all retail traders, collect their money, then aggressively move in the opposite direction. Liquidity is telling us the story, and we need to interpret what the narrative, the story is telling us. This is what we need to be seeing. And you're going to be adapting to price. Sometimes it'll be extremely clear. Other times you might have to wait for a couple confirmations. Not a big deal, but you'll even more so learn how to know before liquidity forms, how to know which is going to be the right order block come day 3. So this is the 2 scenarios that you need to be drawing. I'm going to give you guys about 10, 15 more seconds and then we'll continue. Can everyone mute their mics? Let's see, make sure everyone's muting their mics. All right. Cool, guys. Good stuff. So now I'm going to give you guys another few seconds, and then we are going to go to the next example. And right now, and guys, just so you guys have an understanding, in the previous boot camps, I didn't spend so much time on order blocks, but the reason I'm spending so much time even today on this is because order blocks are like they're so important, and so many people don't know how to make the right refinements. They oftentimes will identify order blocks that aren't properly refined or identified. You need to understand which order blocks are correct, because anything afterwards is all based on liquidity, the whole type of trading that we do. Order blocks is the first pillar when it comes to understanding the algo. You need to understand what the correct order block is. Now, this will come with intuition, practice, developing that experience, which is going to be contributing to developing high market IQ. High market IQ is directly related to intuition, which you can't teach, you can only learn. So learn through your own experience. So now that we have this, I'm going to go right into the next example, which is the other type, right? So now we have reversals for the sell scenario. Now you guys can go ahead and copy this exactly. I'll give you guys another 30 seconds or so, and we'll continue. Exactly, Antoine. And this is where, you guys go ahead and copy this down. I'm just going to talk for a second. This is where, especially when it comes to day one, starting the next boot camp, I want to have all of this either pre-recorded or, have a separate, thing where I can give access to the students. They can watch this before, go over it, and then be prepared for day one, because I want to spend 4 days, everything on, our own approach, the algo approach, because we could spend endless hours even doing that. And it's not to say we're not going to get through it. We absolutely are. But that's the whole journey and the whole point of lifetime education. You're never going to stop learning. The 4 days just exposes you, but you're not going to master it in 4 days by any means. It takes time, it takes practice. And then especially surrounding yourself with the current community that you guys are a part of, the May Bootcamp. But then once you come across all the very experienced traders who have been a part, since December, January, February, then you can even learn more from them. And that's the whole point, is you're not here to work by yourself, work together, work as a community. That's the whole point. You guys are introducing one another. It's not just to kill time. It's because we care about you guys. We want you guys to develop meaningful relationships, surround yourself around individuals who are the same skill set and the mindset. Trading, especially for me, it was really lonely. I had no one to talk to. I had to figure out everything on my own for the majority part of it. And if you can work with other people, you're going to get there much faster and together, mind you. So, all right. Well, now let's look at this. So reversal POIs, same thing. We have our decisional, we have our extreme. Compared to the last example, what do we have? We had a previous uptrend. Now this was supposed to be red or green. We have a previous uptrend, and what happens? Price breaks structure, and then it goes lower. Based off of this, what we would expected? Price to come higher, right? But however, that didn't happen. So what do we call this? Rather than S2D, we call this, right, a failed demand. It failed to make a new high. So we call this a demand to D2S, demand to supply, D2S decisional. That will be right here. It won't fit. Demand to supply decisional. And then we have, of course, our extreme, and always illustrate it must be coming from a higher time frame order block. Always must be. If you just see this random pattern, you don't see an order block being mitigated, this will happen. So based off of this, we have our decisional, we have our extreme. Well, how do we know which one's going to work? Same thing, right? Let's say we have something that looks like this now. Trick you guys up a little bit.
Decision.
Decisional, right? Depending on your view of structure also, maybe, if this is that higher time frame structure per se, you could have some internal structure as well. Because if you're viewing this, oh, this is a break of structure, that's why we don't care about structure coming any further. But yes, decisional, because liquidity validates it. And again, you guys should be drawing that example as well. Decisional, great. Same thing is with the extreme. Now, maybe what happens is the decisional builds liquidity. Maybe we have some equal lows here. And then what happens? Price can come all the way back up to the extreme. Mind you, that's why again, new structure, just take some off the trade. We have the whole management portion coming after the boot camp, but come new structure, take off. Don't hold everything. Don't hold it and try and make a brick. Don't do that. Guess what? The decisional now provides liquidity for what? The extreme. We'll now take out the decisional to then go much lower. So by always identifying where liquidity is, that's going to tell you where your valid order blocks are. All right, guys, a reminder, please, you guys need to be in view of the cameras. Begin some messages, must be in view of the cameras. Have your cameras on, and our moderators, again, they have messaged some of you guys already. Please, this is something we're very serious about, especially when it comes to today's stuff. We need that. Thank you. I appreciate it. So now let's look at it. Some examples. All right, some examples that we're looking at. How is this a reversal POI? Well, let's look at it, right? When we're looking at this, what do we see? We have some form of bullish structure, high, low. We then have a higher high, higher low, right? Now this, yes, of course, isn't a higher high, but again, these are equal highs, correct? So they're equal highs. I just went ahead and referenced this because we have a low, potential equal highs. We now have a new low that makes, right, a new high. So this is what we're looking at. At this moment in time, we're bullish. However, what do we see happen? Liquidity has been effectively taken now in a higher time frame. This is one big candle. We've taken out liquidity. So now what needs to happen next? Well, structurally, we break structure. Again, notice how it's a wick that's closing, or it's a wick that takes it out, right? It's not a candle, or it's not a body, it's a wick. Now we illustrated the wick taking out structure. Now we need to ask ourselves, after this break of structure, now we're looking for new sells, correct? Where's the order block that we look for, and how do we know? I know I illustrated it, but let's think about it. Where's the liquidity? Right here. Where's the order block? Well, imbalance has been filled. Imbalance has been filled. That also took out liquidity before. Imbalance has not been filled. So this becomes the order block right here. Very simple, very easy order flow, learning about it. And then guess what? Price then is going to go much lower. And where do we know it has to go based off of liquidity? Well, we can see that there's generally, a whole pool of lows. This is where price ideally should return. Of course, taking partials here, you guys will have a specific taking partial plan and risk protocol plan. Well, as soon as you guys join, you also know how much you need to make. Answer a Q&A later about that. So now, based off of this, new potential order blocks in the future might be here, right? Because maybe this is a new extreme. Now a new decisional, let's think about it. Where would be the new decisional if I had to ask everybody real quick? Think about liquidity, right? Liquidity is what verifies or validates an order block. So where is liquidity? All right, let's look at this. All right, so we have our new extreme, right? Extreme. Now, all of these aren't equal highs by any means, but we do have, this is where buy stops would be, right? Buying above highs. So when we're thinking about this, where's the liquidity? Well, oh yeah, we have an order block, but guess what? It was mitigated. Is there a new order block? Oh yes, this is an order block, but there's really no liquidity that would require price to really take it out. Yeah, we have a couple candles, it may become higher, but ideally, what do we think is going to happen? Well, over here, took liquidity. There could be an order block, right? A lower time frame order block, in here. Now I'm trying to illustrate that this is being tapped. So after we take out liquidity here, what do we need to do? Take out liquidity to the buy side. Where is the liquidity? Where's the imbalance? This right now, yeah, I'll give a reaction, but there's really only a couple candles really isn't liquidity. So where's the next imbalance? Oh, there's imbalance here. It'll give a small reaction. Probably won't be able to where the move is. Imbalance, imbalance, imbalance. No imbalance, no imbalance. Aha, is there an imbalance? Yes. Does it take out liquidity, this candle? Yes, sweeps liquidity. So what do we think? This will become our decisional right here. So based off of that, we have our decisional right here. Where is the liquidity lying beforehand? Well, again, this is something we'll be learning about. And price will ideally just come up here to drop lower. And that's what we know most likely will happen. And again, this also mitigated another order block. But yeah, so this is an example of a reversal POI. Now let's look at another one. All right, this is the last one, and then we're almost done. Now looking at this, what do we see? Reversal POI. What do we have? We had a previous bearish trend. We had a low, high, right? We then had a lower low, lower high, which would be where, again, structurally, we have high, we have a low. Price comes back into the range. What does it react from? I'm going to ask all of you guys this. Thanks for being active. Why did this react here? Highlight everything it did. Beautiful. And how could we know, besides structurally, that it was going to go here? Besides structure, how could we know it was going to go here? Great. Additionally, there was no imbalance, right? There's no, this move, this buy was already taken care of. There's no imbalance. So there's no reason for it to stop, correct? That's why we had a huge sell-off. No imbalance. It's not random. It's all makes sense, right? So beautiful. We had this here. Awesome. Now what happens is we did what? We made new lows, but this is really liquidity, which we'll be learning. So now let's think about this. We have a low, lower high, lower low. What now happened? We had a quote unquote break of structure. So now let's think about this. Where would be the decisional and the extreme? If I'd ask you guys where the extreme would be in this example, where would it be? If you don't see one, but the general area. Cool, right? The extreme would ideally be somewhere in here. Remember, in the wick, it'll ideally be here. Now, go to a lower time frame and of course, ensure that there is an order block here. Don't just, you can mark it for reference, but now let's think about it. Sure, this can work out, but there's no imbalance. So we now need to see what would make sense. John, additionally, I promise you, do not get in the habit of just looking for wicks. You're going to see wicks everywhere. You're going to mark order blocks everywhere. So for that reason, I would heavily avoid, let me rephrase that. Don't just look for wicks. Don't just assume order blocks are in wicks. I would definitely say identify everything that you can, go on every time frame, see if there's an order block that makes sense, and then choose it. If there's not, then you can approach it. But for this reason, right, there's, again, what's this? Liquidity. So that's not, don't look here. Extreme would be somewhere down here. And where's our decisional? Where's the next imbalance? Well, there's no imbalance, no gap, no gap, no gap, no gap. Sweet. Here's the gap. Awesome. Imbalance. Additionally, what does it do? Takes out some low, right? Takes out some form of low to go higher. What's the key thing that tells us this is the right one? Well, we have liquidity lying before. We have lows, 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 lows. What needs to happen? Price will take out these lows then to do what? Right? Ideally, target new structure. And how do we know where after price goes here, where it's the first area besides new structure, where's the first area we know it'll go? We know that it has to go here. But really, exactly as TJ just illustrated, order block, right? If we're looking to buy, guess what? This order block is where we should really be taking some partials. Why? Because we are now going to be going down. And a question that I have, and again, I'm spending time on this because it'll make things go much faster as we're going through today. If I were to ask, say at this moment in time, we have an order block here. I'm being proactive and trying to build this. How do we know that this is going to be the next valid one?
Building up liquidity.
It's building up liquidity, right? Because we see some form of lows being built right here. So guess what? We know it'll probably go higher. And guess what? We also see liquidity building here. Take out liquidity to do what? Take out liquidity into an order block, sniper entry to then take out liquidity into an order block, sniper entry to then do what? Target new structure. So we can start really to develop a whole idea before it even happens. And this is just kind of the introduction of it, but always get in your mind liquidity, liquidity, liquidity. Liquidity verifies and validates everything, literally everything. Okay. That's how we need to be thinking about it. So as you can tell, same thing, equal lows. As soon as this taps, guess what? You can start using your intuition and developing. All right, well, I'm gonna be selling here. We also have more liquidity taken. Guess what? Liquidity taken for us to come possibly mitigate something in here. We're going to be going lower. Now, where are all of the equal highs? Right here. So what do we need to do? We need to be going higher. Even here, guess what? All relative equal lows taken out for us to then go higher. So this is a fractal understanding, going through this quickly, but good job, everyone. Thank you, thank you, thank you. All right. So this is the cheat sheet. This is an order block cheat sheet. You need to save this with your life. I'm going to give you guys a few minutes to write this down. But let's take a picture of this. on our notes, not take a picture. I did not take a picture of this. Let's write this down in our notes. I am going to do this right here. And guys, remember, you guys will get access to everything after the boot camp. Don't worry about this. Just make the best notes you can. I'm going to illustrate the most important topics of each. All right. So let's look here. First thing, any move that happens in the market is a result of two things: an order block being mitigated and liquidity taken into it. Write that down. Liquidity and order blocks is the operations of a ton. That's the first thing that's going to get you to the next level. Liquidity and order blocks. Whenever you approach the markets, you need to ask yourself two things. Where is the money that is going to cause price to go higher or lower? That's what's going to move price. What's actually going to stop price and cause it to reverse is going to be an order block being mitigated. There are crucial points to know about every order block, right? As we will never know the true exact price that the institutions are entering. So we have said now several times that we're never going to know the exact order block, right? And well, why is that? Why is that? Well, the reason is we don't know the exact price where all the institutions or the conglomerate of institutions who hold majority capital, we don't know the exact price they're getting in. The reason we identify the highest time frame order block is because that's showing us as a whole where the mass majority of institutions are getting in. We don't know the exact price point ever. So by identifying order blocks, a higher time frame, we know the area where they're getting in. But when it comes to becoming a perfectionist, want to get down to the pip, that becomes very subjective. It becomes, very intuitive. So even though we can't do that, we can become very accurate. Even just seeing with some of the back tests in a couple slides, we can see how it becomes very probable. Now, let's go over some important points to note. First thing, extreme points of interest are the highest probability. Granted, that you will not always have an opportunity for the extremes, but if you only identify the extremes, your win rate will be very, very, very high. Very high. You might miss out on some trades, but if you want to have a very high win rate, go for the extremes. For instance, if you're doing FTMO, any funded account, do extremes, no questions asked. The point is to get funded and then do whatever you want after you get funded, right? Extremes are everything. All right. Next thing, never take a decisional from a decisional. I'll elaborate more on this later on, but let's say you have something that looks like this. A decisional from a decisional. Right. Let's say that you have something that looks like this. Think about, we have an extreme, a decisional. We have a decisional. And guess what? Now we have a new decisional. Do not take this. Do not, it will not work ever. I've never ever seen it work. And I'll tell the students as well, do not look for a decisional off of a decisional. It will not work. For time's sake, we're going to be going over this later, but it'll do something like this. Why? Because it's a trend line. Don't take a decisional off a decisional. No matter how you draw it, how you do it, it will not work. So decisional off of a decisional, never take those. All right. Next most important thing is what? 1 second. Is the only order block we know must be mitigated is the higher time frame. So if the higher time frame order block is mitigated, and let's say you have maybe a 1 minute inside of it, do not assume that the 1 minute needs to get mitigated. We need to follow intentions. We need to understand with our confirmations, you'll be learning how to approach these individual scenarios. So the highest time frame order block is the only one that needs to be mitigated. All right. Give you guys a second to write that down. 1 second, everybody. All right. 1 second, clear all. How to do this. All right, we're good on that. We're good on that. All right, next thing that is extremely important. Must be liquidity lying before the order block. This ensures snipers entries. If there are no entries or if there's no liquidity, do not take the order block. I don't care how good you think it looks. Do not take it. It'll either completely fail immediately or have some small pullback. That's one of two things. As I say, it'll always happen. You're going to have, if you let's save an order block, maybe here, right? Let's say there's no liquidity that builds before and like, oh, I just want to enter, blah, blah, blah. It'll either just completely screw you or it'll do this small reaction and then you'll end up getting screwed. Okay. So if there's no liquidity before an order block, do not take it. Don't care how good it looks. All right. Next thing we need to understand. There must be an imbalance before an order block, or it is not an order block. I don't care what you guys have utilized in the past. This is what's going to be the absolute highest success for you. This is how I trade. This is how our students trade, getting so many entries opportunities. There must be an imbalance. Then this includes price coming back to the same one as well. Ophobia is lying at liquidity. Do not take it. Order blocks must be lying at structurally relevant areas. Extreme, decisional, right? So we know all of these, all right? Additionally, some pro tips. OBs will either continue the higher time frame trend or have a small reaction, then fail and push through it. As we just talked about, if we have order blocks, right? Let's say you think that there's a really good order block here as we'll begin to understand what SMC traps are. Two things. Price will either come to the order block and go higher, resume that higher time frame trend. If it is the true order block, right, it'll continue structure. However, if it is not a true order block, what will happen is price will just end up failing right through and it will continue lower. So we will be talking about this today. So we can wrap up this day one. All right. Now, second thing, if you're going to place a limit, only place it at the extreme refinement of the extreme. Talking about this in a couple slides. If you're going to place a limit, never place a limit at a decisional. Always place it at the extreme. Very, very simple, very easy. Okay. We understand that price can mitigate the higher time from order block and have a reaction and then continue to the extreme. So what do I mean by this? Let's say we have a higher time frame order block here. And let's also say maybe we have a refinement inside of it. Maybe structurally, it looks like this. We need to understand that two things can happen. Price can tap the higher time frame and just absolutely drop. That can very well happen. Or price can give a small reaction from the higher time frame order block. It can then come back into the extreme and then drop. These two things are very probable scenarios. So with our own refinements that we teach, you're prepared in any given one. This is what we're saying here. We need to understand this is all price needs to tap, but it can tap higher. So we're prepared in both scenarios all the time.
Okay. Can you please make an example of the point that it says that liquidity must be before the order block? I don't know if you refer like after the order block is made or literally before, like it grabbed liquidity. I don't know what you were saying.
Liquidity must be lying before the order block.
Oh, okay. Okay. Thank you.
Mm-hmm. All right. So now let's go through this, right? Let's look through now some more pro tips for your reference. Right. Next, always wait for lower time frame confirmations that an order block will hold. We still need to go over all of this. This will be on the last day. You have to understand everything even before talking about entries, because we don't utilize traditional entries. If we did, we would be just like everyone else. We're not. We want to get 1 to 15s, 20s, 30s on a daily basis. A lot of our students are doing that, and that's based off of our own refinements. So that's what we need to be focusing on, right? In order to go anywhere, price do two things. Save this, write this down, save it with your life. That you need to understand that any move that happens in any market must be there. It must make sense. It has to have logic. By being able to answer these two questions, you're literally validating the right move that's going to happen. It needs to react from a strong enough order block and take enough liquidity to get there. So lastly, if price is overextended, right? Let's say it looks something like this. Let's say that structurally, right? We had this, but especially with US 30, GU, what's been happening? Well, shoot, do you wait 10 years for price to come back up to here? No, this is where we teach, and you have to let your intuition take you over. Understand that price could just keep selling all the way off of a cliff. You don't want to be focusing on that. You want to be focusing on more relevant areas of structure internally. So we do have one slide about that. I will be introducing it, but it's very good for notes, as again, there's a lot of information to digest as we're still in day one, which is honestly 10% of the whole course. So we're going to keep going. This will take practice, but you guys will build intuition and IQ, and this will become unconscious over time. You'll be able to know it just by looking at it without marking everything and practicing. You're going to be doing it so much, it's going to become habitual, just like tying your shoes. You don't think about it. This is how trading needs to be as well. All right, I'll give you guys another few seconds, and then we're going to go ahead and continue. All right. If you guys don't get it, don't worry. We'll write down a question. We'll refer to it later. Let's keep going. So we're going to have a break coming up here shortly. All right. We're going to go through this last slide, and then we're going to have a break. All right. And then we're going to start day 2 stuff, which will be much quicker than everything so far. But this is pivotal in understanding. I know that we're on a time crunch, but realistically, I'm going to spend as much time as I can so I can convey this to you guys. So when you join the community, you're ready to roll, right? So now, as we just talked about, well, what if there isn't any clean structure, or what if price is overextended? This might be new to you guys, especially when it comes to steep trends, even GJ, when it's just going to the moon, what do I do? Do I wait so long for price to come back? Do I adapt? What do I do? This is going to be the process of how you're going to approach it, okay? So the first thing, you're going to have one option. The first option that we need to understand, let's say that this is what price is doing. Let's say that we are extremely overextended. Let's say buys, this is where we are right now, okay? The first thing we have to do is wait for a new internal structure to form on lower time frame and just take the extreme. Meaning, let's say this is where we are right now. We're extremely hyperextended. And I was trying to illustrate this here. Let's say we're extremely hyperextended. Well, how can we approach this? What do we do? What you need to do is you need to do exactly what we've been doing so far. We need to wait for some form of extreme, right, to take place. We need to wait for that confirmation. And once we see something that looks like this, what do? Just wait for price to come back to here, build liquidity, take out the liquidity to go higher. Same thing. Price is overextended. What do? Price comes back to the order block, or what does it always do before? Builds liquidity, exactly what we illustrated here. And then what happens? Price will then have a reaction. Guess what? This becomes an entry. This becomes a possible entry here. This becomes another entry. This becomes another entry. And then so on and so forth with the whole trap and stack approach once you get to that point. But the first thing is, if we're overextended, the first and one of the mastermind approaches, just wait for new structure to form and then take the trade off of it. Don't force anything. Be very routine in the setups that you're taking. Be very routine. They're every single day. It doesn't matter what your trading style is. They're always going to be present. That's the first scenario that you need to be paying attention to. All right. Now the second scenario is going to be waiting for the highest time frame extreme. Okay. So what does this look like? Well, exactly as you can see here, what we had in here, this is GU. This is what we had called out a while back, right? And we are in a bearish trend. So there was no imbalance, no imbalance, no imbalance. This was the only imbalance that was left. Of course, it took out some form of liquidity. And if I had to ask you guys right now, do you guys see how much imbalance there is? Like there's so much right here. Yes, you can be taking all these, but we need to understand the real move will only happen once the imbalance is completely filled. So my question for you guys is, how could we know that this is the right order block besides it being the extreme, besides it taking out liquidity? What tells us that this is the right order block?
Equal high.
Equal highs, right? Here, here, here. So my thing now is, why did this whole move happen with no stop? First of all, there was no imbalance. All the imbalance is filled. Think about it like this. If there's no imbalance, it's pretty much just a wall to, it'll take off every time. If there's an order block, it will have a reaction. Okay. So two things. Again, why did this move happen to go higher? What did it do? Took out lows. After we take out lows, we need to take out highs. So for sure here, but where would be the next area? Right here. And guess what happened? What did we do as soon as we took it out? Had some form of reaction. And then guess what? Let's say you missed this whole move and there's a whole bunch of imbalance right here. How could we get in without FOMO buying? Do this whole imbalance, wait for that lower time frame structure to form. Get in here, get in here, get in here. Guess what? Price touches the order block. What do? Again, sweeps liquidity. Here becomes an extreme. And what do? We now have to target liquidity, right? Where's the liquidity you want to ideally be targeting now? If we're thinking about liquidity. I mean, let's think about this realistically. Do you guys see any liquidity over here that needs to be targeted? I mean, realistically, guys, there's all imbalance. Yeah, we'll have an order block here, but guess what? This is still, price should still come down here. So what do we think is going to happen based off of this? Well, we have some liquidity here. So we will get a reaction, but what do you think is going to happen? Probably a little bit of a retracement, either to come here, then go lower, or as John just illustrated, to take out what? These equal highs, and then go lower. And this example is exactly what happened. And I sent this to the group, ended up being phenomenal, and a huge sell-off for GU. This is the whole move even before it happened, and you can be able to understand that. So guys, type a 1 in the chat if that makes sense and you're at least following. All right, cool. Good stuff, everybody. All right. The last approach is going to be identify decisionals. This is the intuitive approach. I do this extensively, especially when it comes to the whole trap and stack approach, right? You know, when we're talking about structure, we know that structural extremes, they're the ones that are going to have the highest win rate, right? We know that they're going to be having the highest win rate. However, now that we're looking at this, structurally, what do we have? We have a high, we have a low, we have a high. Great. Where's our extreme? Well, it's right here, right? How do we know? It took out some form of liquidity, imbalance right after, price go higher. Where's the decisional? I love decisionals for scale and entries, but it takes a lot of intuition. For me, why do I know this is a decisional? Well, there was an order block here, right? Had a little bit of a reaction and then had an engulfing. So then guess what? Maybe if you guys can understand, where's the liquidity that told me this was valid on a fractal level? Where's the liquidity? It's actually going to be below this candle, and that's what we're getting into today. Liquidity isn't just equal highs, equal lows. There's literally money, liquidity above every high and every low. Liquidity, taken, to drop, liquidity. Why did this candle go higher? Because it took out the previous low. Something we're going to be getting into today. Same thing here. What do we think is going to happen? If price goes up higher, I'm going to be entering here, order block, then continue higher, right? If not, liquidity to come back down to here, then to go higher. But that's besides the point. Let's keep going on. These are some very key points to note, and being able to decide which one is going to, you need to have a whole bunch of different options, and then just practice. This upcoming Wednesday, I want to ask you guys for a poll later on today. I'm going to type it in the chat. If you guys would rather have a back testing or not this upcoming Wednesday, the next Wednesday for back testing or psychology, trade management, which one that you would like to talk about. And then we'll have a schedule set for afterwards. All right. But now finally, let's have a quick break, everybody. Go ahead. And we are going to go ahead and take let's do a 7-minute break. So at 12:35 p.m., we're going to be returning. So 7 minutes starting now. Please be back and we'll get ready to roll, come to the next day. after just one more slide. With All right, everyone, please, if you're hearing my voice, please return to your seat, and we are going to go ahead and finally get started with some of the day 2 stuff after just one more slide explaining order flow. So yeah, make sure you're ready to go. Today is going to be, I know we finally just finished up with some of yesterday's stuff, but as mentioned, we have about 3 to 3.5 more hours. As I said, that we are going to be finishing around 3:30 to 3:30 to 4 p.m. EST. So get what you need to get. Make sure that you're all ready and set, and get your head screwed on right, because it's about to get a little hot in here. All right, I'm gonna give you guys another 30 seconds to please return, and everyone in the chat, please send it to if you guys are ready to start. I'm ready. I'm waiting to see. I want to make sure everyone's paying attention. All good. All good. All right. All right. All right. All right. So here we go. Here we go. Let's get into it. Make sure you're taking good notes. We're going to be going over this and finishing up day 2. So now that we've finished our quick break, we're going to go right into institutional order flow. So let's talk about this, right? We've talked about extremes, we've talked about decisionals, but this is the last pivotal step in understanding, what really market operations are, and understanding, what the institutions are doing on routinely every single day. And this is kind of the first step to understanding one of the main types of liquidity, as to how operations and how the institutions are stacking their positions. But we need to attack it as a whole before we get into the fractality of it. So institutional order flow is essentially when the institutions are showing their hand. They're showing us their intention. They're showing what they're going to be doing before they actually make the move. And this will routinely happen every single day. So by definition, institutional order flow is the consecutive mitigation of extreme POIs. Institutional order flow is the consecutive mitigation of extreme POIs. All right. So I'm going to give you guys about a minute. Just go ahead and draw this by example right here. Go ahead and draw this by example exactly as you see it. And I'm going to give you guys just a minute or so to do that. And while you're doing that, I'm just going to be explaining briefly a little overview of it. So order flow is the cleanest price action and our highest probability trading setups when it comes to the easiest setups, I'm going to say, right? So order flow is something that is present everywhere, every time frame. And we need to think about it as this is where the institutions are accumulating their positions routinely after stopping out retail traders. So what they're doing during this whole meanwhile is they are really going to be building a trend line. And as I was alluding to just a little earlier, is when we see order flow, and while you guys are drawing it out, I'll even draw it out too. So when I'm done, we'll be right at the same. So when we're looking at order flow, right, we combine structure in this example. Now, structure isn't always needed for order flow by any means, but typically there is structure that follows it. So when we're looking at order flow, it's consecutive of higher highs, higher lows, lower highs, lower lows, and it's for both buys and sells. But it's revolving around the same concepts that we've already been using this far, revolving around liquidity, order blocks, structure, premium discount, everything. But if you only want to take order flow, these will be the highest probability trades you take, and your win rate, I promise you, will be over 80, 85%, if not higher, especially if you know when to have the break-even protocols, partials. When you receive all that, your win rate will be exceptionally high. But there's a few caveats to understanding order flow. So when we're looking at order flow, we need to understand that, again, it's the institutions showing us their hand before they make the real move. It's like them showing you what they're going to do before it actually happens. And order flow comes in the form of a trend line. We know trend lines, some of us have traded trend lines, maybe some of us still do, and we're trying to stop doing that now. Trend lines do not work. They work until a certain point, until they don't. And what order flow is order flow builds trend lines. And what we know is order flow is what's building trend lines. But by the time the trend line is completed, meaning it has, 2 or 3 touches, dumb money or retail is just now seeing it. So in order for retail, right, in order for retail to lose, well, what do institutions do? They have to manipulate that trend line per se. So when we're seeing extreme, structurally, right, we see low, high, higher low, higher 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 high. And when I'm seeing a trend line, we can see that the trend line is where? Well, connecting all the higher lows, we can see where the trend line is, right? So it's important to note by the time that we see order flow, we know it's going to form a trend line. Must write that down. Order flow is what forms trend lines. But by the time retail sees it, it's too late. So by identifying this process, this is what's going to establish order flow for us. Right here. First, I wish I can move this to the background. Give me a second. Shift. Okay, cool. I just did that. All right, so this is the checklist to establish order flow. The first thing, order block sweeps liquidity to the left. Now, this can be when you start order flow, it can be from a decisional or extreme. This is when you start it, but after you start it, it has to be from extremes. And I'll illustrate that in a second. So it must take out some form of liquidity to the left. Always, always, always. That's always going to be the first most important criteria and requirement to establish it. Taking out liquidity is what's telling us that's where the institutions have gotten in the past. And now what they need to do is break even on their position in the future. Right? So order flow establishes that first sweep that's telling us where the institutions have gotten in, which again is right here to the left. What happens? Liquidity is swept, and what happens? Price goes higher. So now this becomes our extreme order block. Yes or yes, COC, correct. Becomes our extreme order block, and now we have a new high. This sweeps liquidity, right? Sweeps liquidity. We have our extreme order block right here, and guess what? It'll make a new high. Now, what this will react from is going to be either a decisional or it'll be an extreme right here. So let's say in this example, let's say maybe this is a decisional. It doesn't really matter. But what happens is liquidity will be swept into an order block, and then price will effectively make new structure. Following order flow, we now need to focus on the new extreme. This is a previous decisional, right? And now we have a higher low, a higher high. This becomes the extreme. This is where price institutions must come back to here because they need to mitigate out of their position. So when we say order flow, we need to think or link that to money transfer. Money has been transferred from this order block to now this order block. Once an order block is mitigated, that means the order block's been breaking even. It's no longer valid. So now we need to focus our attention on the new order block that mitigated it, right? So right here, let's say this order block, right? It's left. It's not tapped. It's not mitigated. Liquidity is built beforehand. Price takes out this liquidity into the order block. This tells us that this order block was mitigated. So what we need to imagine in our head is that money has now transferred from this order block to the new order block that mitigated it. So now where we're focusing on is what? Well, we're now focusing on this order block. Now this becomes the new extreme structurally, and this is where we're going to look for price to return to. We need to now see after it creates a momentum in BOS, we're going to have imbalance for it. We now need to see the same cycle happen. It sweeps liquidity, new structure. Where's the liquidity before the order block? It's right here, right? Equal lows. And of course, beforehand, it needs to liquidate the order block, come back into this order block. It's mitigated, and then price runs away. Now, where's the new order block left? I'm going to ask you guys this as a whole. I know you guys are writing, but I'll ask you now, where's the new order block following money transfer? Right? Now the money has transferred now from here to now here. And what do we think? Price should now ideally go higher. There are a few key factors you must write down. Pro tips 101, you need to identify this. If you see 3 or more mitigations, meaning 1, right? If this, let's say even this starts it, or it doesn't matter. Let's say this starts it. This starts order flow. You see 1, 2, right? Mitigates again, 3. After you see 3 instances or more, at least 3, you do not want to take this order flow anymore. Do not take this. Absolutely do not. And why are we not going to be taking this? Because this is now a trend line. This is a form of liquidity that we're going to be talking more about today. And what happens? What types of traders are looking at trend lines? Trend line traders, right? They're either going to look to buy on a trend line or sell on the retest of it. So how do institutions manipulate this? Take out the trend line and then go higher. So what I'm saying here before we get into any of that is after 3 instances of order flow, do not look there anymore because it will not work. It will absolutely not work. Write that down, save it. If you see order flow after 3 times order flow has been established, do not look there anymore.
Could you go on a higher time frame and possibly use the 3 order flows as it to sweep and get liquid?
Exactly. And to your point, I'm going to actually go ahead and illustrate that. So let's say right here, let's say maybe we have order flow here. Right. So let's say we have order flow here, order block, right? Order block. Great. And now let's say price is going higher. At this point in time, you need to be aware of 2 things. 2 things are going to happen. 1, yes, this is an order block over here, but this will not be valid at all. This will not be valid. It's lying on a trend line. This will not work. So we need to expect a couple things to happen. 1, if price comes down to here, what do we think is going to happen? You got it. Exactly, Richard. Perfect. It's going to give a small reaction because they still have to mitigate out of their position. Like they still have to break even. So the order block will get tapped, but it will not sustain. Why? We have liquidity below here. Liquidity. You'll see this all the time. Whenever you see a trend line, it'll fail at some point in the future. It will absolutely fail because it's very liquid. So if you see this, we're going to be using this to our advantage, not to be buying, but to using as a pullback to sell from. We're going to go over this in the next few slides and talk about liquidity. But this is, if you see this, do not take it. I don't care how good you think the order flow is. Do not take it. Focus on the right directions. We know the intention. It will not work. It will not hold. You know, how many times have some of you guys maybe even known what order flow is, and then you'll keep seeing it. Don't take it. It won't work. Okay. So this will happen. And if this doesn't happen here, the next thing that will happen is price will just do this. It'll just keep going higher, right? It doesn't have to come back to here. And then of course, some point in the future, when we're ready to sell off, where do you think we're going to be targeting?
Griffin, the 3 mitigations you're talking about, what time frame you look for? 15 minutes or above, or low time frame?
Any time frame. Even if it's on the 1 minute, more than 3 mitigations, no. Draw a trend line, and if you see that it's lying on a trend line, do not take it.
Thank you.
Yes, sir. Yeah. So then we already know what's going to happen, and I'm going to ask. I think Braylon. If you remember Braylon, you know, no one else can know this. Do you know what this point's called?
You're talking about the EQL?
Right here. Besides EQL, what specific point is this? If you remember, if not, then yes.
Are we talking in terms of types?
Yes. Well, no. You're chilling. Josh just said
engineered liquidity.
Yes, sir.
Oh, well, I said EQL. That is engineered liquidity. I was trying not to like say it out loud.
You're good. You're good. All right, good stuff, guys. But this is order flow. Make those notes, keep it down, and go for it. If anyone needs any more time on this, type it too. If you need more time.
For number 5, oh, okay.
Yes, sir. Repeats that cycle. All right. All right. So repeat cycle, and now I'm going to keep going. So we do have an example. I will go over this briefly, and then I'm going to start with today, and then if we have time at the end, then we'll go through everything. We'll do a cumulative review for those who want to stay, because I know, again, international dose. It's getting nighttime there, but let's look at this, right? So what is order flow? Well, let's look at this from a diagram perspective. Okay. When we're seeing order flow, we always think about structure first. When we're looking at the structure, we can clearly see that we are bearish. So we have a low, a lower high, a lower low. Now, a lot of people, again, I know would look at this. I know that people are going to want to say this. Don't worry, you're going to be unlearning this today. Structure is almost going to become irrelevant. But what we're understanding here is, if we're talking about order flow, we have a decisional at this point in time. That, I know you guys can see the candles, but this was a decisional that was mitigated. And what did price do beforehand? What are the steps? We have 1, 2, 3, 4, and then 5 just repeats the whole thing. The first thing, take out liquidity to the left. Beautiful, Antoine, right? Takes out liquidity. Then we drop lower. The second thing is what? Create a momentous push or break a structure. Great, right? The third thing we need to see is liquidity building before. Where's the liquidity building before? Right? It builds liquidity before. Then 4 is the mitigation or the entry. We are going to take out that liquidity into the order block and then do what? Target new structure, right? This will become that new low we're going to be targeting. Price mitigates, of course, drops, and then boom, first target hit perfectly. Now, if we notice, based off of order flow, money, this was mitigated. Yes. So now money has transferred from this order block to here because we swept liquidity to mitigate it to drop. So now this order block is no longer valid because it was already taken care of. So now this is where the next order block is coming into play. And if you notice this order block right here, even though it's ever so slight, we do have an imbalance between here and between here. Price came up into the imbalance, but it didn't fill it. So this is telling us this is liquidity that's lying before our order block. So we know for the real move to happen in the future, for the main sells, this is where it needs to happen. So of course, price will just keep pushing down, doing its thing, but all it's doing is building what? It's building more liquidity for the future. So this is where we have to have confidence and not be emotional. Oh, I'm missing the trade. I'm missing the trade. No, there's always going to be opportunity for you to get in. They want you to, they want to literally feast on your fears. They want, like, they already know you're going to lose at some point. They're just wanting to see if you are willing to lose more than what you can so they can get more money out of you. That's all it is. You know, even if you miss a trade, I know, I was even talking to Tristan, you know, everyone has the problems. If they miss a trade, they want to chase it. Or if they don't want to take a trade, you know, they won't enter because they're not confident in it. If you have a specific set of rules and you do those rules, you will be profitable. Point blank. Trust the probabilities. Same thing here. Let's think about it, right? For instance, we have a low, a lower high, quote unquote, a lower low. Did this mitigate anything? No. Where would be our decisional, quote unquote, and our extreme, quote unquote? Well, our extreme based off of structure is right here, which is great. Why is this not a valid decisional? Because it's literally liquidity before the extreme. So we're not looking here. Where's the next valid decisional? We need to see liquidity line before it. Oh, okay. This is liquidity, right? So where's going to be the decisional? Right above. Do we see an order block that took out some form of liquidity? Yes. Here becomes our decisional. Here becomes the liquidity that the price is going to take out. What do? We can look for short-term sells. Why? Additionally is because what? This is also a break of structure, right? We have a low, a lower high, a lower low. This becomes a break structure telling us that we're going to be having some form of pullback, right? So this break of structure first tells us that we are most likely going to be coming up to here now. But in order for us to come up there, I know this is getting a little too red, but once we come up here, what do we need to do? We need to build enough money, build enough liquidity, take out enough liquidity in order for us to get there. So let's see what's actually going on. So let's say we enter ourselves here. Boom, that's, you know, a quick 1 to 15, 1 to 20, easy. We know what's going to happen. Let's say we enter ourselves here. After we take out this liquidity, where's the first area we know that we need to target? Well, we need to target more liquidity, right? So where's the imbalance? Oh, no imbalance, no imbalance. Boom, here's the first imbalance, right? What's left above it? liquidity, right? So let's see. Here we have our order block. Here we have our order block. So now what? We know that we can be taking sells from here into our buys because we had a BOS. This BOS tells us we're having a pullback on our higher time frame to go to the order block where we need to go. And where are we going to be targeting after we get in here? Well, first, we're going to be targeting new structure. We know that we're going to be targeting this. Additionally, is what's left above this high? Well, this is an order block, right? But it's not valid because we have Islamic liquidity. So we know it'll give us a pullback. So being a mastermind, you guys will learn, if we know this isn't going to cause new structure to go lower, what will it do? It will cause a small pullback. And pullback to where exactly? Well, a new order block before liquidity. So we're in buys here. We can then stack more buys in here. And guess what? We're stacking the buys to target where? To target our liquidity, to target the order block. Now we're closing our buys. Boom. Several buy positions closed. Now what happens? This order block is successfully mitigated. Money now is transferred from here to where? To here, right? Now this becomes our entry. What does price do? It goes lower. Awesome. Now what? Where are we looking to enter? Based off of this new order block, right? Following mitigation. And then of course, what ends up happening after this? Price is going to target what? All of these equal lows. Even all of these trades, all in between. You can catch. Let's think about this. Money's now transferred from here to now here. Here is our extreme. Where is our decisional? Our decisional is right here. Why? No gap, no gap, no gap, no gap, no gap. There's no gaps. Decisional, extreme. Which one do you think is going to work? Decisional, why? Liquidity before. Takes out liquidity when the market opens for the new day. And Skyfall. Let's see what Cecilia says. I know I'm like going hype super beat right now. I talk really fast when I'm wired, but I know I'm saying here, there, everywhere. But that should make some sense, even for the new people. I know it might be a little, I know it might be a lot, but our goal is to make problems, turn problems into solutions, be a detective, solve the crime, and make sense of something that makes no sense. You know, even when it comes, well, I'm not gonna do this now. We mean Braylon, you know, I started doing the example and it started clicking for him like, oh my God, the epiphany. It becomes very simple once you understand why it's hard. Like you have to understand why it's hard in order to know how it's simple. So you'll be able to take trades anywhere, everywhere, all the time. You know, once you understand the possibilities, you only need one pair. You'll be a total beast with that one pair, you know, taking every position, every which direction. And you can even be trading one session a day, 1 hour a day. Let's say you're